Afternoon and welcome everybody. My name is Mel and I work for Big Society Capital, lead on our social sector and engagement work. Know many of you on the call, but I'm very conscious that a lot of you may not know each other. So what we're going to aim to do in this afternoon's session, we're going to do some quick whiz round of introductions in the room. We're going to have a bit of context about the remit of the Solutions Collective, which I'm going to give you shortly. This is the second in the series, and then we're then going to move on to a little bit of framing about Catalytic Capital in terms of, well, the topic of the title is can it truly enable truly innovative social investment. We have a 10-minute slot from our very own Amir Rizwan, who's going to talk about Catalytic Capital, and also some of you will be aware that there is a commission doing some work on the report due to be published in September. And then, as we always do in these sessions, we're going to hear from Denise from Rowntree Foundation about some of the more practical examples of Catalytic Capital in action. We aim to do that fairly quickly because the main point, it's definitely not death by PowerPoint, is to give an opportunity for the people in the room to have discussion, to ask questions. And so that you know, we do record this session, but we record it only for people who have registered or who have attended, if you want to go back and watch something. But we do endeavour to capture the insights and publish those more widely. So if you ever want to go back to the first of these, which is around guarantees, you are able to do that. So although it says on my that we'll do introductions first, actually I'm going to set a little bit of context and then we'll go straight to introductions. So as I said, this is the second in our rollout of Solutions Collective, which is essentially an insights forum. It's an opportunity for us to talk in a little bit more detail about our social lending strategy, to explore with you some of the areas that we're looking at as a way to try and help us deliver our objectives. And that's sort of a cross-team piece of work that we do in Big Society Capital. You can see that even here, actually, the first four people I can see on my screen are Victoria and James from the investment team, Amir from the investor engagement team, and myself from social sector engagement. These sessions are, we're here to focus on the topic. In our social lending context, we do have some terms of reference. I'm not intending to go through them. You rely on me heavily, I'm sure, as a chair to just steer us in the right direction and hopefully keep us on time as well. I think that's all I'm going to say for now. What I'm going to do is go over to introductions. I'm going to just turn us back to, I'm going to make sure that we're all on, I'm on gallery view so that I can see everybody, and I'll start with people on my screen. So I get the first choice, the power, but then the power becomes yours, so you can just nominate the next person until we've been all the way around, and that'll be a test of my mind to make sure that we've got everybody covered. So I'm going to start with Helen, you're first on my list. Do you want to just give us a quick introduction, please?
Afternoon, everybody. My name is Helen Heap. I am a social investor and researcher and non-exec director sitting on various boards and investment committees. I have a background in what you might call conventional finance. I was an institutional investor, and my mission in the social sector is to try and find patient, socially motivated capital to take fair risks and to provide long-term sustainable funding for social organisations. I'm based in Liverpool, and I'll leave it there. I've got to nominate somebody, have I? Neve?
Hi, thank you for that. Get this out of the way early. I'm Neve Goggin from a very small consultancy called Small Change. So I'm an independent consultant working on social investment and money for good projects. At the moment, my main contract is with Barrow Cadbury Trust as Learning and Evaluation Partner Fund. And I choose James Broderick.
Thank you, Neve. I'm Jamie Broderick, and I'm a Director of Impact UK's Impact Investing Institute. My background is in wealth management and asset management. That's where I spent 35 years. And I'm especially, at the Institute, I'm involved in different projects, but I'm especially interested in social lending and CDFI lending. To tell you more about that, I'm going to pick Peter Udale.
Thanks, Jamie. Yeah, Peter Udale, Responsible Finance. I'm a director of Responsible Finance, a sort of a volunteer, non-executive director. I joined the board about 2 years ago with the aim of trying to help Responsible Finance sort of raise its profile and attract more capital, both from and from other places. And I've got a meeting next week with a big bank. They're going to give us lots of money for Catalytic Capital to change it. So that's why I came along today. I thought I'd get some good ideas. Oh, I have to choose somebody, don't I? Victoria.
Thanks, Peter. I know we're speaking straight after this call. Hi, everybody. I'm Victoria. I'm an investment manager at BSC. I'm focused with the social lending market system, and also at the moment working more closely around debt community capital with some of the CDFIs and with Peter. So yeah, that's me. And I will pass on to James Burrows.
Afternoon, everybody. Thanks, Victoria. To be here for the second one of these, I spoke at the first one on guarantees, and really keen as part of our the work I lead across some of our social lending work, to hear some of those insights and the other pieces from other people as well on some of this stuff. So yeah, great to be here.
James, you have the power.
Dan Gregory.
Folks, hi all, thank you, James. So yeah, Dan Gregory, I do a number of different things. Some of my time is spent supporting Social Enterprise UK with their international work in about 30 countries around the world. But I also work independently, locally in the Southwest, and with a range of organisations, Local Trust, Clubs UK, yeah, lots of different big sites. Capital is lots of different ones, all around funding and finance for social enterprise and charities, really. And I also should apologise that I can only stay till 2:45 today, but I'm really pleased to be here, and I thought it was better to come than not. So apologies for that. Can I pass on to, I'm sorry, I don't know your name, the lady should.
I'm Jenny van der Merwe. I'm the director of Kindred Liverpool City Region. We're an organisation, so relatively recently, about 18 months, almost 2 years ago now, to provide patient capital investment into social trading organisations right across the Liverpool region. So yeah, it's really exciting that I'm here today to hear capital and see how we can play a part in Liverpool City.
Thanks, Jenny. Your sound is a little bit, we could just about catch you, but if we're struggling, I'll get you to put any things you need into the text. And Dan, just conscious of time, if there's anything you want to ask and you don't get an opportunity, just or stick it in the chat and I'll make sure that we cover it, but hopefully we still have time. I'm going to just pick up from you if that's okay, and get Mark to introduce himself. Mark Sims.
Everybody, morning, afternoon. I didn't know I was going to put my video on. I've just got back from a run, so apologies. That's fine. Mark Sims, British Business Bank. We are a UK development bank and the largest investor in venture capital in the UK.
Lovely, thank you very much. Well, just very quick other team updates before we get to our speakers. So Lydia. Olivia, do you want to go next?
Sure. Hi everyone, I'm Olivia. I work in the social sector engagement team alongside Mel. So my role is very much looking at how we engage directly with frontline organisations and working on kind of tools and resources through our Good Finance platform to help support those organisations.
Lovely, thank you very much. Lydia works in our comms team and has helped supporting on the Solutions Connective and hopefully be able to join us soon. So I think I've covered everybody, and I know that we're due Jed Devlin, who's joining us also, who is currently working with Key Fund. Many of you know Jed, but on to come from Power to Change. So I'm sure he'll be joining us shortly. So let's start off with introductions to our two speakers. Denise, do you want to go next and then hand over straight to Amir?
Perfect. Thanks, Mel, and hello, everybody. It's great to be here. Some familiar faces and some new. I'm Denise Holle at Joseph Rowntree Foundation, leading our social investment program, which you'll hear a bit more in my talk. This is my first solutions session, so also looking forward to the discussion and learning from all of you as we. What else can I say? Prior to joining Joseph Rowntree Foundation, I worked at Big Society Capital on the portfolio management team. So it's nice to be back.
Thank you, Denise. Amir, do you want to do introductions? And then I think everyone.
Thanks, Mel. Good afternoon, everyone, and lovely to be here. My name is Amir Rizwan. I work within the investor engagement team here at BSC. My focus is predominantly on trusts and foundations. We would kind of really classify under kind of catalytic investors. Prior to joining BSC, I actually worked deploying Catalytic Capital through my work at Comic Relief, where I was working on developing a social investment fund, and which is called Redshed, doing all sorts of catalytic investment. So, really looking forward to the discussions that are going to come out of today's session.
Lovely, thank you, Amir. Okay, so let's start off with just a couple of word context. James Burrows, who obviously talked about the work that we're doing together and lead us. James, can you just give us a couple of lines of context of our social lending work that we're doing? I mean, all of our solutions collective are built around trying to look at the different levers, different bits of the market that we're working in and see what's possible. So could you just pick up that baton for around the use of catalytic capital and how we're thinking about it? And then I think that'll tee us up perfectly for both of Denise.
Thanks, Mel, and I'll be really quick here, because I think it's mostly around framing this. There's two ways, I think, within the context of some of what I do with everybody in the market around catalytic capital, and I think there's one lens with what we're doing with the investment that we're making around some of that stuff, whether that's seeding stuff, scaling stuff, sustaining that. And what that means is that there's one type, one way, one set of terms, but we're trying to apply those different lenses through some of the way they invest. And the second thing we're trying to do, and hopefully the speakers will pick up on some of this stuff, is where we're trying to find more catalytic capital alongside us and alongside other partners in different ways, because we recognize and we know that different parts of the market need capital beyond just what BSC has and what BSC can have in the long term. So finding different ways to enable that, grow that pot, and allow that capital to expand and be sustainable long term. I think that's the piece that we're also trying to think about here. So both how we invest and also bring others alongside us into this bucket. Now, conscious as well that some of that stuff and our current emphasis along the lines of those different elements might need to change in current environment. We started this strategy a year and a half ago. We're currently in a thought was a recovery period post COVID. It's the macroeconomic environment is slightly different from stuff. So how we think about that allocation is a bit of a work in progress at the moment, some of that stuff. So just put those things in context, and handing over to you, Mel, and then to the speakers.
Lovely, thank you very much, James. James, we've got another James Tedarek who's joined us. If you just want to any news, join us. If you want to just introduce yourself in the chat, that would be great, just so that everybody else knows who is on the call. Yes, so that was great framing. Thanks, James. I mean, I'll be honest, when we first started talking about catalytic capital, I think I struggled really to just try and pin down exactly. I think we have quite a wide range of interpretation of what catalytic capital is. So I thought that was the best place to start. Amir, you're going to just try and help us understand what it is, what its role is in making social lending work better. And as you say, you've got some experience of this, so really good for you to set the scene for us.
Yeah, thank you, Mel. Thank you, Olivia, for showing the presentation. So I've got the joyful task of trying to distill capital in 10 minutes, and I will do my best to provide some rigor. I will just, as a kind of caveat before I present, is kind of I'm looking at this from a very high level view, and I will try my best to capture the essence of it, but I don't think I can topic justice in 10 minutes, but hopefully provide a good grounding on this topic that will lead to some really good, interesting debates and discussions after the presentation finished. Could you please get to the first slide? Thank you very much. So, anything, I will start off with a definition. This isn't my definition. This definition comes from Tideline, where I specialist consultancy in the impact investing space. And the reason I start with this is to try and frame Catalytic Capital, but also showcase, I guess, as Mel mentioned, the different areas it touches upon, and sometimes it can lead to people not fully understanding where Catalytic Capital sits. So it is a broad definition, as you can see. So we have things here that, within the kind of what I posted on the screen, I talk about disproportionate risk, concessionary return, addressing capital gaps, not fitting conventional risk return profiles or conventional investment norms. Now, in order for something to be classified as capital or capital investment, it doesn't necessarily need to touch upon every single one of these areas. It could be a combination of these. It could be one of these areas in isolation. And they all point to different kind of ways in which capital can be used. So things around concessionary return, very much around how you can make investment funding, kind of investment products more suitable to the end user. Then that could be a whole raft of many ways. One could be about lowering the return expectation, or you use innovative structures like blended finance, where you combine grant with investment together. So within all of this, there is a lot of space for creativity, but I think really to start off, it just showcases that this topic can be quite large when you think about it, when you first look at it in that sense. So I thought it'd be a good way to start there. And Olivia, could you move to the next slide, please? And just, I guess, looking at the different roles that capital can play within our ecosystem. So effectively, capital has a key role around the seeding phase. This is where we look at the way capital can look to support impact enterprises or funds that really trying to push the impact envelope forward, but don't have the track record that would really make them applicable to go and raise investment in mainstream markets. So if we look at some of the early stage first time funds that have launched in the UK, an example would be something like the Poverty Premium Fund, which I know Denise talked to in more detail, which really went on to initially at the first onset raise capital from a combination of big society capital, but alongside a range of trusts and foundations. So that's a really key area for capital to kind of really play a role, and really has a direct link to kind of some of the things that we're looking at from a social lending perspective. On the scaling element, this is an interesting area where capital is there to support organizations who have limited track record. They might be subscale in size and still might be in a market that's developed. So therefore, what's the role in capital to be able to help them scale and expand their strategies? And that's some of the things that we might be seeing here at BSC through our social lending work with some of the managers that we're looking to support, who are able to then go on to provide this type of capital. And also really links well to some of the blended finance products or funds that have been launched over the years, where they're actually really looking to help organizations scale and grow their activities in order to become more resilient or develop things like their trading income. And the final bit that I just wanted to touch upon was the sustaining element. So this is an area where capital can play a role, whereby it's almost permanent like capital to support organizations over a longer period of time to kind of harder to reach beneficiaries, and really support those business models that won't really be able to achieve a full commercial level of viability. So as you can see, capital does touch upon different areas, and within each of those strategies, you have different types of products in which capital can be used and has been used in the past. One of the things I just wanted to mention about is there's also this role that capital plays around supporting areas where there's a market gap. And by that, what I mean by that is effectively the areas whereby finance or mainstream finance is unable to go into or be able to support in any way. And capital gaps, just to kind of break that out in terms of why those arise, there's a number of reasons why. So it might be that the population that a entity is trying to reach or is looking to be served is an underserved population, or is it in a demographic that's very hard to reach, or it might be that the place that where they're situated in is in a really underserved part of a country. There are gaps around innovation, so the capacity to de-risk really innovative new products that serve a number of people and also grow impact is also an area where the gaps do exist, and there is a need for Catalytic Capital to really think about how it could fill those gaps. So things around historical biases. So effectively, if you look at places like in America, you see the role that Catalytic Capital has played, especially in the CDFI world, where it's been about how CD structures can reach underserved communities as well and geography. So just wanted to highlight those. Olivia, if you could go to the next slide, please, that'd be great. So one thing that I did want to talk about, especially with this group, and I'm sure this has been a hot topic and it will continue to be a hot topic in our sector, is this whole return dynamic. So there is a way that Catalytic Capital really links well with being accessory in the return expectations. However, that isn't the only way you should be looking at it, because sometimes, in many other cases, the predominant characteristic of a Catalytic Capital deal or approach might be around disproportionate risk. So the idea to take risk as opposed to just making it about concessionary returns. And I think that's a really important thing to bring out, because we know it's an ongoing area of discussion within the social investment market here in the UK. I think it's really important to kind of flesh out these two distinct things. So I think, you know, my opinion is, in terms of how we should be looking at this, is we should really be looking at really kind of being a bit more clear about this, and the starting point should really be the question about how flexible capital can enable impact in areas or communities and situations where mainstream capital can otherwise not reach, just due to the other things I've listed before. But I just like to kind of mention this because this is an area which, you know, time and time again, you hear discussions about Catalytic Capital always being framed in a concessionary way, and that is one element of it. But to also realize as well that there is a much more broader area of discussion around how Catalytic Capital could be used, and one of those areas is also about, you know, the idea of disproportionate risk taking. Olivia, if you could go to the next, please. So, what kind of funders operate in this space, within the capital space here in the UK? So, the capital provider. An example being our involvement in things like the charity bond market, where, you know, we started off as one of the very first few investors in space, and now you have a market there to the tune of £230 million here in the UK that shows the Catholic nature of kind of our investments. And also the other one to mention is the role of high net worth and family offices. So Kenny Arth in the US have been really, really active in this space and really pushing the dial on shifting their investment model into kind of catalytic opportunities and that side of things. So just to mention that it isn't just philanthropic sources that do this kind of work. It's, you know, it's a whole range of different ones. Just to plug the work that Mel mentioned that we were doing. So there's been a bit of work going on in the background around how we can do more in the UK to understand Catalytic Capital better. And that's involved a research project, which we're hoping to publish the report on in the autumn. Really, we're looking at the role and state of Catalytic Capital here in the UK, understanding some of the barriers and blockers in that side of things, and also really getting a discussion going on here in the UK about how we can have a more UK-centric discussion around Catalytic Capital, because a lot of the information points and sources of this market tend to be quite US-focused. And the last thing I'm just going to finish on is this diagram. I won't talk much, but really it's a really interesting pictorial representation of Catalytic Capital that I borrowed from the latest Kenny Arth Impact Report. Just something for you to take away to look at in terms of how an active Catalytic Capital investor currently looks at showcasing how they make their investments and putting it within the spectrum of all the various different approaches. Mel, I'm going to stop there and hand it over to you if that's okay.
That is lovely. Thank you very much. Sorry, I'm just trying to see if we've got Olivia back, whether she's managed to. Oh, she's here. She's here. That's okay. Great. No worries. Don't worry. I restarted recording. These things happen. So I'm just about managed to find the presentation, but I'll have Denise's loaded and ready just in case we lose you again. Thanks, Amir. That was really helpful. I think to try and some of that defining as much as we can. I thought it was nice when you started with the definition. We always normally avoid those, don't we, in the social enterprise space? It's not start with a definition of what it is, but that was really helpful in terms of giving some of that context and some of the examples. But one of the whole reasons for having Solutions Collective is we also want to make it as practical as possible. So as we followed this format before, we really want to talk about catalytic capital in action and what this actually means in practice to both the investor and the investee. I suppose the ongoing challenge for us is there's always going to be more market demand than potentially there is supply, unless we can get this balance between risk for both investor and investee into the right place. Thanks very much, as always, for lively conversation. You make my job easy. I don't have to do much, and I'll see you all again soon. Take care.